All right, so today I wanted to talk about this Twitter post from Brian Feroldi. I think he puts out quite a bit of good stuff, so I wanted to talk about this one. First things first, if you get value out of the video, please like, subscribe, comment, check out those links below. Very much appreciate support. So he says, investing is risky, not investing is riskier. And this is a very, very good point that too many people don't understand. Now, this is disproportionately geared to the people that don't invest or don't own stocks or real estate or whatever. But I think the principle still holds, and I think that it's still very important to discuss. So the reason that not investing is riskier is that, number one, nobody's going to be there to save you. I mean, pretty much the only way that you can get away with not investing is if you have a public sector job that has a very generous pension. And the thing I would say about that is that kind of stuff is not going to last forever. That is, I mean, I don't know if I would go as far to say that is it a Ponzi scheme, but in a way, like, it's not going to last forever, because those kind of jobs disproportionately, like, people are not providing, $200,000 a year or $150,000 a year in value. Like, they're not, and a lot of times it's not even close. And that money is typically coming from either inflation or the taxpayers. And given the way that the debt is continuing to skyrocket, that's not going to last forever. It can last a long time, but it's not going to last forever. I'm not one of the people that thinks that we're going to see hyperinflation tomorrow, but mathematically, that which cannot continue will not continue. So my point there is that this is why not investing is riskier, is because nobody's going to be there to save you. Like, nobody's going to be there to save you, and nobody should be there to save you. This is another thing that I'm very firm on. The idea that other people should be there to save you is just absolutely insane, because other people, like, when you put a very small group of people in charge of saving for people's retirements, it never ends up well. Number one, because they typically experience no negative consequences for being wrong, and number two, it's a way that people can easily be corrupted as well. Like, it's very easy for people to be corrupted, because they can make a lot of money for not really doing a whole heck of a lot. And not only that, they have a lot of power over people as well. So you need to figure this stuff out for yourself, right? You really need to figure this stuff out for yourself, because as time goes on, it's only going to become more and more apparent. Because, I mean, you take the debt, for example, right? The way that we're gonna solve the debt problem is one of two ways. And I think we all know which way it's going to be, but it's either we drastically cut spending and thus entitlements, or we inflate away the debt. And I think we all know that people are never going to vote to cut entitlements. So what they're going to do is that they're going to vote to inflate away the debt. And because of that, the only way that your purchasing power isn't going to be destroyed is if you invest. Whether, like I said, whether it's stocks, whether it's real estate, I think Bitcoin is the best, but I still have a place for stocks and to some degree real estate. I'm not necessarily a fan personally of actual, physical real estate, because the headaches that are involved, but it's undeniable there's a lot of people that are very successful with that and have done very well with that and will continue to do very well with that. So I think there is a time and a place for that, but personally it's just not my style. My personal preference is what's going to require the least amount of work possible. And it's stocks and to an even larger degree Bitcoin. And that is my whole point, right? That is my whole point. And this is another thing too. When people critique Bitcoin, it's like, oh, well, I can't buy anything with it, or whatever critique people have of Bitcoin. And the best response to that is very simple. It's like, Bitcoin has done a better job at protecting people's purchasing power than anything. And frankly, it's not even close. And that's the big thing. And a lot of people say, oh, look at it's down 20% from its all-time high. If it's such a good store of value, then why is it down so much? And the response to that is very simple. I mean, if you go back, 100 years, there isn't an asset that correlates to being a very good hedge against inflation over very short periods of time. There's no asset that has a very clear correlation. Like none. There isn't one. I mean, if you read Stocks for the Long Run, he points this out very good, that there isn't an asset that over a very short period of time, we're talking, months or even a year or two, always, or even with a very high degree of likelihood, will protect against inflation over the short term. So again, people who make that point, again, now, to be fair, a lot of people in like third world countries, that's a concern, but in first world countries, it's not a concern that your purchasing power is going to be inflated away over the next month or even 6 months or even year. But over decades, that is a very big concern. And getting back to the main point here, that's why we need to invest. That's why it's so important, is because over the long run, I mean, the government's quote-unquote target for inflation is 2%. But if you look at real inflation is probably 5 or 6% per year. And if you look at real returns on stocks over we're talking like 100 years, it's about 6 or 7% per year. So if you look at the returns on stocks, like 90% is attributed simply to just inflation. And if you look at Bitcoin, well, Bitcoin's returning like 50, 60% per year. I don't think it's realistic that it does that over the long run, but I think it certainly is realistic that it returns, 20, 25%. And that's what, 3x what stocks typically return, even double what stocks return over the last decade or two. So that's why I think Bitcoin is the best. And that's why I have again, I don't have a crazy amount of Bitcoin, but that's why it is a much larger allocation than you typically would see. I still like stocks just because even if you take like the uber bull case for Bitcoin, the stocks are still going to be around, right? Stocks are still going to be around because people are still going to need to buy stuff, and thus companies are still going to make money. And I mean, we're still going to need houses, we're still going to need insurance, we're still going to need, all that kind of stuff. Some stuff will go by the wayside, but we're still going to need we're still going to need food, and thus it's going to take companies to farmers and the people that build the stuff for the farmers and the people that build the stuff for the farmers. So, corporations are still going to be around, and publicly traded companies. So, the main point of this is you really have two options. And I mean, this is another thing that a life lesson that I've noticed is that smart people will always look for patterns, right? The way you improve yourself is to always look for patterns. And if you want to be more successful at something, you need to look at the patterns of the people that are good at it and the people that aren't good at it. If you take people that are financially well off, what are the patterns of people that are financially well off and the patterns of the people that aren't financially well off? Well, the people that are financially well off, number one, they're probably better at deferring gratification. The people that aren't probably are worse at deferring gratification. Now, to a large degree, that's genetic, but to a large degree, that's also able to be learned. And when you dig a little bit deeper, well, they're more likely to own stocks, real estate, Bitcoin, you name it. And a lot of people say, oh, I'm living paycheck to paycheck, I can't afford it. Well, to some degree, I understand that, but to other degrees, it's like, okay, well, if the government came up to you and said, you have to invest 10% or even 5% of your paycheck, or we're going to put you in jail, like the vast majority of people that are making excuses as to why they couldn't save some money, they would find a way. So this is also the way to think about it. It's like, hey, if you were told you need to figure it out or you're going to jail, would you figure it out? Most of the time, the answer to that question is yes. If it's you want to get in better shape, right? You want to lose weight. If the government said, hey, you got to lose 20 or 30 pounds or you're going to jail, you would figure it out. The vast majority of people would figure it out. So this is the way to think about it. The way to think about it is that's the way to think about it, because too many people, they make excuses. Oh, well, I have a bad metabolism, or I grew up in a poor family and I'm not super intelligent. I don't have a degree. It's like, no, you need to figure it out. because your life literally depends on it? Do you want to work until the day you die, and not only that, live a lower middle class lifestyle, maybe not even middle class, lower class lifestyle? Do you want to work till the day you die? Do you want to die when you're 60 or 65 because you didn't look after your health? These are the questions that people need to be asking themselves. So again, investing, yeah, it's risky, but not investing is riskier. And I mean, another good example that I learned from, or that I seen from stocks for the long run, this is something I already knew, but it's very good to point it out, is that I believe it was a 15-year period or a 20-year period. I don't remember, but it was either 15 or 20-year period. There isn't one period, and he went back to like the early 1800s. There isn't a period to where stocks underperformed bonds over that amount of time. So again, if you simply buy and hold stocks over a 15 or a 20-year period, there isn't a period in history to where stocks underperformed. And again, keep in mind, that included, the Great Depression, that included World War I, World War II, the Civil War. And yet people talk about, there's going to be some there's going to be a recession and you shouldn't invest. It's okay, well, do you think the recession is going to be worse than the Great Depression? Like, of course not. The chances of that is very, very low. So that's why not investing is riskier. Over the short run, it's risky. And this is something that I can't stand about the people that point that out about Bitcoin. It's down 20%. It's like, yes, there isn't a single asset on the face of the earth that can't, other than technically like T-bills, but the upside is massively capped, right? But when you look at assets that fluctuate in value, everything is risky over the short run. Absolutely everything. The real question is it risky over the long run? And that's the main question you need to be asking yourself. People are paranoid about the tariffs and are we going to see a recession? And it's like 10 or 20 years from now, nobody's going to care. Like, nobody's going to care. Right? Frankly, the only realistic black swan we face right now is a nuclear confrontation with Russia. Which is funny that there's so many people that are kind of egging that on, and they're all worried about the tariffs, but yet they're egging on a nuclear war with Russia. It's kind of odd how crazy that's people's mentality. But anyways, I could go on really forever with this kind of topic, but I really just wanted to make this clear. And this is mostly for newer people and for people that don't invest. And frankly, the last thing I'll leave it on here too is that for most people, frankly, like if you're not willing to learn economics, if you're not willing to invest, if you're not willing to do these basic things, I don't really have a whole lot of sympathy for you, because anyone with any degree of intelligence whatsoever, they can figure this out, right? Really, they can figure it out. If you are flat broke, living paycheck to paycheck, and the thought has not crossed your mind that you need to learn some economics, and frankly, you need to save some money, and whether that's taking a second job, finding ways of cutting your spending, like if that thought isn't crossing your mind, nothing is going to make you, there's no amount of suffering that's going to make these people learn their lessons. So that's the last thought. I'll leave it on here. So anyways, like I said, always like to see comments, feedback. Like I said, make sure you check out those links. And again, I really appreciate all the support. So like I said, check out those links and stay tuned for more.